Hey everyone, it's Zack Beck. The housing market has been white hot over the last year, thanks in part to stay-at-home orders that were put in place due to the pandemic, as well as record low interest rates from the Federal Reserve simultaneously occurring while we have record low inventory across the board. This is causing many individuals to wonder whether or not we are in a housing bubble right now, and if we're going to see prices crash in the future. And this is all the more important because the price of home has actually increased 10.4% over the course of the last year due to a recent study conducted by CoreLogic. So what I want to do in this video is break down in detail what is going on in the housing market right now, whether or not we are in a housing bubble, and what's going to happen to housing prices moving forward in the future. So let's take our time, dive into the details, and jump into it right now. As previously mentioned, the housing market is on a tear right now, thanks in part to the record low inventory levels that are happening across the board. As a matter of fact, right now we have half as many homes available to be purchased as we did a year ago today. And this is causing people to get into bidding wars and pay above asking price. As a matter of fact, a recent study was conducted and nearly 42% of the homes that are being sold above their asking price. And also on top of that, they are being sold in less than 6 days. So if you're in the market to go and actually purchase a home, you're going to find yourself against stiff competition, possibly paying more than what the house was asking for and trying to do so in a very condensed time frame. So this is creating a circumstance where it is almost becoming untenable for people to reach into the housing market. And that's not even to think about what the current median housing price is. And a recent study was conducted, and the median house price across the United States of America right now is $371,000. That's not even taking into consideration what the median housing price is in your own current neighborhood or your own current city that you live in. As a matter of fact, I live in San Diego County, and right now the median house price for just a simple home is over $675,000. So you might be sitting back and asking yourself, Zach, are we in a bubble right now? Well, I think the answer to that is possibly, because what we have seen over the course of the last year is something historical. Obviously, the pandemic wrecked the economy and changed and transformed the way in which we work. More people now work from home, and because of the digital nature of our work, you're not as required to go into the office. So people are able to telecommute, or they're just able to stay at home and work somewhere else entirely. So this is causing housing prices to go up in more remote areas that you might have not even thought of previously. For example, in Boise, Idaho, housing prices are up nearly 23%, and that's an area that hasn't seen a lot of economic development recently, but we're seeing that happen throughout the country, where even other cities are paying people to come and actually move there to work as a digital nomad. But whether or not you want to be able to purchase a home in your current market is really going to be a variety of factors that you will need to take into consideration. A, whether or not you have enough money to put as a down payment. You have the option to obviously do a less than 20%, but then you'll have to carry mortgage insurance. And if you're able to elevate yourself to be able to put 20% down, that's going to put you in a better position to be able to hopefully be selected by the seller, but you're then still going to have to take out an 80% loan and pay that off over the course of 15 to 30 years. Or if what the new proposals coming out of the administration might be, they might even suggest a 40-year mortgage, which is just insane. So all that to say, I would say the dynamic that we are encountering right now does put us in a position where the housing market is a bit untenable for people to get into. On that note, some people try to make the correlation between the last housing crash to the potential housing crash that we might see in the future. And I would say we are seeing two very different scenarios occurring. What happened back in the 2006-2007 timeframe when housing prices fell off a cliff, that was very different, because what was encountering in that moment was we had subprime mortgages with variable interest rates, and people who were getting loans for homes that they couldn't afford or have the income to back were then falling into foreclosure once they found that the economy crashed and they weren't able to afford their payments anymore. That has actually changed dramatically since then, and what we see now is that mortgage underwriting is much more involved. Now we're seeing people being required to put 20% down, show 2 years of their income, and being able to demonstrate to a lender that they're going to be able to pay off the loan over the course of their life. So I would say that right now the existing mortgages that we see are not as crazy as they were about 10 to 12 years ago. They're a little bit up there, but they're not as unstable as as we saw previously. And then we don't have all of those toxic asset or mortgage-backed securities that Lehman Brothers and everyone else was involved with, which really almost caused the entire stock market to collapse. So right now we do have a different environment, and it's actually more predicated on the fact that we're seeing it being more difficult for homes to be built. So we're seeing record low inventory. People are more inclined to live at home and actually be able to work at home. So more people are wanting to purchase a home instead of living in a small apartment or a small studio. And then on top of that, the Federal Reserve has kept interest rates historically low, and they've indicated they're going to continue to do so through 2023 to 2024 to help us navigate out of the pandemic and help fix the economy long term. So when you factor in all of those variables as it relates to the housing market, we're in a position right now where we're entering uncharted territory. And I've heard from individuals who are realtors and individuals who work in the space who believe the housing prices will continue to move up over the course of the next few years. So I'm not here to tell you that you need to buy right now or you should wait until later. It's really difficult to understand. When it comes to purchasing a home, it's a very personal decision, and it's not something you want to view solely as an investment, because you want to look at it from the vantage point of, is it going to actually benefit your life? I made a whole video about the difference between buying a home and renting a home and what's better for you. I'll put a link in the description, you can check that out. But when you think about it for yourself, if you're going to be trying to enter the market at this present moment, it is very volatile, it is very expensive, and it is extremely competitive. So it may or may not be the right time for you. And one thing to bear in mind is that more housing production probably is going to be not too far down the road. Recently, the new proposal put forward by the Biden administration called the American Jobs Plan sets aside about $100 billion for housing construction here in the United States. So that, coupled with what is happening at the state and local level, where there is more legislation being encouraging individuals and cities and developers to actually to produce affordable homes, it might be that a few years down the road, we might see inventory levels begin to rise. And then when the interest rates go up a little bit, we might see prices of homes begin to decrease a little bit, and you might have better luck at that point in time. But it's really up to your discretion. It's just something you want to think about. So you might be asking yourself, are housing prices going to drop in the future? I would say in the short term, probably not, especially here in 2021. One of the things that we're looking at, in addition to the record low interest rates from the Federal Reserve and the record low inventory levels across the board, is that 4.8 million millennials turned 30 this year, many of whom are entering the housing market as first-time home buyers. And this is causing people to have even more competition for limited supply. So one thing to think about is that if you right now are someone who's considering going into the housing market or purchasing a home simply because of the record low interest rates that exist, that is something you want to think about as a possibility of a good deal. But when you look at the actual numbers, if you're going to get a home at a less expensive rate at a future moment, as opposed to a more expensive home with a lower interest rate, it might balance itself out over the course of time, and then you might even end up with a better home if you wait a little bit. Now, I'm not saying that if you have the right home at the right time right now, you shouldn't go for it, because I believe this is an inherently personal decision that you need to make for yourself. But ultimately, you want to factor in a lot of variables and think about what the dynamics are going to be in the economy and in the development space of homes in the future. And I might be very wrong. We might see housing prices continue to skyrocket, where they become less and less affordable long term. But government is already starting to get involved to a certain extent with the American Jobs Plan, and also at the local level. What I experience working in local government is that many policies are being passed right now, and many elected officials are advocating for more affordable housing. So it's bound to be that at some point in time, we're going to see some of the price of homes decrease, or at least more availability for affordable homes. This might also correlate with slightly higher interest rates, so you might see yourself at a future moment at a different place where you might not be as inclined to purchase a home in comparison to now with the record low interest rates. So there's just a lot of variables that you want to take into consideration, and I want to lay them out for you so you can make a well-informed decision moving forward that hopefully benefits you and your family. When it comes to record low inventory levels, one of the apprehensions that many sellers have had is because of the pandemic, not wanting to have people in their homes, or not knowing if they were going to have the ability to move themselves, so they want to just kind of hunker down and stay there, which just kind of fed the cycle of what we saw where fewer homes were on the market. Now what we're seeing is the distribution of vaccines are really ramping up throughout the United States and causing people to be more inclined to be willing to go out in society, to shop, to be able to do other things, to travel, and yes, potentially even move to a different location. location. So from that standpoint alone, it might see ourselves with more homes coming onto the market, especially as the pandemic starts to subside. And that could occur along the course of this year, but it probably wouldn't really affect the inventory more substantially until 2022. Just another variable you want to take into consideration and something I'm thinking about for my future prospects of home ownership. One of the most effective ways that you can get a good price on a home right now is if you put a down payment on the like button for the YouTube algorithm. I'm just kidding, but right now, if you wouldn't mind, please tap on the like button. That would help the channel out a lot, help push this video to other people who might need to hear it, and hopefully it'll help you and them make wise decisions for their home purchases in the future. So a quick recap of what is going on in the housing market right now. We have record low inventory. Houses are coming off the market within 6 days of being posted. The year-to-year average is over 10% of increase for housing prices. In addition, we have substantial competition where people are outbidding one another and actually paying above asking price for homes. And on top of that, we have record low interest rates that are going to be in place until 2023 or 2024. So all of these things come together and put us in a position where it appears as though there might be a housing bubble, but whether or not there really is one is still up for question. So one thing that you can do is just be a wise steward of your finances, do all the research necessary as you're considering purchasing a home, and especially if you are finding yourself putting yourself in a situation where you're having to bid on a housing price or you're having to make a very quick decision on one of the largest investments of your life, that you only do so if you know 100% that you're supposed to be doing this and it works best for your life. And one thing I would strongly encourage you to do, whether you purchase a home now, whether you sell a home now, or if you purchase a home in the future, is try to make sure that your mortgage payment does not exceed 25% of your monthly income. And that is very important because having a home is important, yes, but you want to make sure that the broader spectrum of your finances are taken into consideration so that you still have money left over to save and invest to achieve your goals long term in your future. And that is why I always encourage people to do the following. Do everything you can to save money where you are able to. Try and cut spending if possible. Avoid lifestyle inflation. This is especially important in purchasing a home. You don't need to go for the highest level home. Get something that you can afford and that is going to work well for you. Furthermore, you want to avoid debt. Outside of a mortgage, you really don't want to carry any balance of debt. That's going to really continue to limit your ability to make any sort of progress with your net worth growth over time. And lastly, what you want to make sure that you do is you invest strategically into the stock market, preferably into index funds, so you can make sure you're moving along the lines of achieving your goals and building wealth over the course of your life. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please tap the like button for the YouTube algorithm. Help push this video to other people who might need to hear it. Furthermore, if you have any questions, please comment down below. I'd love to interact with you, get to know you, do any research on your behalf, and help you make well and wise informed decisions moving forward so you can do everything in the present to be able to achieve your goals long term. Furthermore, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create positive content that makes a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful day. Talk to you next time.